Hello everyone and welcome to today's presentation on working from home and taxes. My name is Kai and I'm an accounting prof at TRU. We're celebrating our 50th anniversary this year with gifts of learning. Now I think tax is a pretty poor gift, but hopefully we can put a couple dollars in your pocket by the end of today's presentation. So let's get started. Now first off, I'm going to qualify this and say, if you think this applies to you, or that you can make any of these deductions, of course, check with your accountant before doing so. So the first thing you have to ask is, are you eligible? Now in that case, I think there's really two categories. The first is you've always worked from home and COVID didn't change that. Well, if that's the case, you probably know the rules, you probably have kept the appropriate records, have the right forms, and in that case, just keep doing what you're doing. There is a little bonus here, and that is you get to deduct internet, or at least your work portion of internet this year. So that's new for 2020 and it might get you a few extra dollars in your pocket. The majority of you watching this presentation, I suspect, fall in the second category, and that is you started working from home because of COVID. If that's the case, you have yet another choice to make. Whether you want to use the simplified method, which is exactly what it sounds like, simple, or the detailed method, and that one requires some more record keeping, some calculations. We'll get into that. But first, let's find out if we are eligible. Now, you have to meet all of the following criteria. But in 2020, the criteria was relaxed and it's far easier to meet this working from home threshold. So the first one is that either your employer requires you work from home, which means you probably met the rules before, or because of COVID, your employer has given you the option to work from home and you've taken it. And I suspect a lot of you out there are falling into the second category where once COVID hit, employers let you work from home and you took it. The second criteria is that you have to work from home for over 50% of the time. So that's pretty straightforward, more than 2.5 days a week for a 5-day-a-week job. The 4 weeks up there is a little bit confusing, and that just is restricting people who only worked from home for several weeks, maybe when COVID started, and then they immediately returned to the office. But I suspect most people who are affected by, or I should say working from home because of COVID, they were doing so for several months, if not, I guess, 9 months now. And in that case, you meet this criteria so long as you work from home, like I said, more than 50% of the time. The last one's pretty straightforward. The expenses relate to your employment, and that's logical because you can't deduct personal expenses. But we'll talk more about these expenses in a moment. One last thing here that I want to mention or make you aware of is that you can only deduct expenses in the time period that you were working from home. So if you worked from home in March, April, and May, the expenses in those 3 months, internet, utilities, you can deduct those. But you can't add in all of your internet for the year or all of your utilities for the year, only the months that you're actually working from home. So February, March, if that's when you started, all of the time until December, you can deduct those. Now, I did say that the simplified method is the first option, and it makes a lot of sense. There's no forms, there's no receipts that you need to keep, no calculation, well, I guess a small calculation, but no measurements that you need to take. All you have to do with the simplified method is figure out how many days you work from home and you get $2 a day. Now, up to $400 total deduction, and that's it. A day here counts as any day worked from home, whether full or part-time, but not vacation, not sick days. So any day you're working from home, $2 a day. One thing I want to note is that the $400 is not $400 in your pocket. That's a $400 deduction, which means depending on your tax rate, you might only get $60 to $200 in your pocket. So it might not be a ton, but hey, it's better than nothing. And maybe you weren't aware that you could do this. Now, if you think you spent more than $400 on working from home related expenses, stick around because then we're going to look at the possibility of using the detailed method. Now this one has some more requirements. The first is you require one of these forms up there, a T2200 or 2200S. That's just the short one. It's new for COVID, and I think it's 3 yes or no questions. But basically ask your employer, they should sign this and give it to you to confirm that yes, you work from home, or at least have the option to. You also have to keep your receipts, and you're going to have to do some calculations with square footage and maybe even time. Now, what do we mean by that? Well, with the square footage, it's fairly straightforward if you have a home office. So you just figure out what the square footage of this room is and divide that by your total house. So if this room is 200 square feet and the house is 2,000 square feet, then it's 10%. You get 10% of your utilities or your rent or the various expenses we'll talk about. But if you're using a common space, meaning the room is not just used for work, in that case you also have to factor in time. So we're going to look at an example here, and I'm sorry it's going to involve a little bit of math. But in this case, we have a house 2,000 square feet, and the dining room is 400. So that's 20% of the home space. But you can't deduct 20% of the costs because the dining room is used for other purposes. So we're only using the dining room 40 hours a week, which means the rest of the time is not deductible. The CRA wants us to do some math like that, and whoops, only roughly 5% of your expenses can now be deducted. So if you're using a common space, it has a little bit more math involved in figuring that out. All right, let's talk about the actual expenses that you can deduct. So this list over here is all of the available ones. The first three is effectively utilities. Then we're talking about internet, which I mentioned is new for 2020, maintenance and repair, and rent. Now the utilities utilities and rent, as well as some maintenance, is going to be based on that square footage calculation that we just talked about. And so you'll get a portion of your utilities or your rent. Internet is going to be any reasonable amount that's used for work, so not the full internet bill, but some portion of that. Maintenance and minor repair, that one's a little bit tricky, and that's just because what's the distinction between minor and major? Again, of course, ask your accountant if you're confused, but if there's repairs, if you need to replace light bulbs in your office, that's deductible. If you need to repair your home furnace, that would be a minor repair, and you would deduct a percentage of that based on the square footage of the room. Same thing with your air conditioning. If you're going to paint the walls because they're a nice yellow color, in that case you could deduct the paint as a minor repair. But if you replace your furnace or you get a new air conditioning unit, that would be considered major, and you can't deduct any of that. Now you might be noticing that there are a lot of home ownership related expenses that are not included on this list, and there's a few that have a question mark. Now these ones down there can only be deducted if you are a commissioned employee. Most employees are salary based with zero commission. If you do make a commission, you can deduct some of these, or at least a portion of them. So that's something to look into, but most people as a salaried employee, you cannot deduct these ones. You'll also notice that mortgage is not included, either interest or principal, and those are not deductible to any employee, along with the rest of the items on the list over here. So internet connection fees are your leases. If you buy a chair or a desk, that's furniture and you cannot deduct it. The capital expenses, so if you replace the flooring in a room, the windows, that is not deductible as well. And then if you have some decorations on the wall up here, you can't deduct those either. All right, hopefully this has been helpful and maybe put some money in your pocket or offered you some deductions that you didn't know were available to you. Thank you for sticking around to the end of the presentation, as I know how exciting taxes can be. A quick disclaimer there at the bottom that, again, talk to your accountant if you think that this is applicable for you. But anyways, with that said, thank you for sticking around and stay safe out there.